Welcome back. You're still tuned into Trading Hour, and it's all about IPOs now. Let's talk about Sri Lotus Developers Realty. The company is eyeing D-Street debut. The IPO has opened today, will end on August 1st. The IPO size is nearly 800 crore rupees, issue price between 140 to 150 rupees per share. Anand Kamalnayan Pandit, who is the chairman and managing director, along with Sanjay Jain, who is the CEO at Sri Lotus Developers and Realty, is joining us now to discuss more and to understand about the company as well. Gentlemen, thank you so much for joining us today.
Thank you for having us.
You know, 93% of your total projects come in from redevelopment, and only 7% is coming from greenfield development. Tell us, how does accounting work here? Because usually when we talk to real estate players, it's more about how are the bookings going on. How does redevelopment differ from that? And what is the margin differential that you earn versus, say, a greenfield project that you will be coming up with?
Sure. So first of all, I'll introduce my company. We are in a micro market of Mumbai, operating in luxury and ultra luxury space, and that also in redevelopment space. In generally redevelopment space, people are in aspirational or premium category. We are in luxury and super luxury. So when it comes to redevelopment of societies, as we know, we don't have to pay for land. That's the main hurdle or advantage, I would say, in our case. Also, second advantage, we are not carrying much issues with legal, because their buildings or societies are standing there since many years. So these are the two major advantages what we are having. And otherwise, you know, when you take a greenfield project or maybe a land, then you run a risk of title maybe at some time, or maybe some approval issues. Here, we don't find that. So because of that, and also since all these societies are generally have taken away those prime land in the locations. So all those prime land we can get. So these are the advantages for us. And also our sale becomes easy because society old tenants who come back to the society, they generally need more extra space or more apartments or more office space. So our even, I would say about 10 to 20% our material is sold to them. The model is we go to society, old societies, we make the partnership with them, we remove their whole building, we make a tall high-rise building, and percentage of that, generally about 35 to 40% of that new building, we give them back. And remaining portion we use for our recovering our cost and make the profit out of it.
Okay.
So that is why, you know, we are like a net debt-free company. We don't need debt. Even up to the extent that we have got 300 crore fixed deposit as on 31st March, which is very unlikely with the real estate company. So we are slotting our company, not a hardcore real estate company. We are, I could say, we are more like a specialty chemical company rather than a chemical company. And we are like a product company in real estate space. So we make product, we make a high-end product, fully loaded product. And we complete all our projects faster, 2.5, 3 years. And that is how our business model is.
Gentlemen, thank you for joining in. Congratulations on your IPO as well. You know, you have a major concentration towards the western suburbs, right? But now with the western suburbs being the way they are, and the eastern suburbs, particularly Thane and all those areas coming up as rapidly as they are, have you thought of moving towards those areas as well? Because the demand for more than premium housing or more than entry-level housing has increased even in those areas.
Yeah, I mean, as I said, we are more in luxury and uber luxury space. So we are right now concentrating on western part, and now we have entered into town also. And our philosophy is that we want to take one micro market, and which are micro market which offers at least 50 to 60,000 square feet per square feet kind of pricing. Only those markets we are moving right now. And we don't have to, I mean, we have no marketing. We have never done any marketing. We have never advertised. Maybe probably first time in my life we have advertised today, because our IPO is open and we have to give that mandatory advertisement. Otherwise, no advertisement, no hoardings, no social media marketing. We have never done any printing of even brochures. No big launches. So what we do is we focus on our high-end product and on customer and customer service. So slowly, every micro market we establish ourselves, we get those kind of premiums and move forward. Yes, answering your question, yes, tomorrow if we find a potential in other micro markets like Eastern Suburb, Thane, we'll be more than happy to move there. Since we are an asset-light model, we are completely asset-light model, except one project, which is 7% constitutes of our total portfolio. We don't have any land. So because of that true asset-light model, we are that flexible. We can go anywhere, any micro market.
So, I was looking at your numbers. Now, since you do not have an accounting issue, I believe you do not go the completion method. It's as per the stages, right? As per the P&L. EBITDA margins at FY23 were 12.8%, moved to 52.6% in FY25. Is it the right way to look at those margins? And will you be able to maintain these numbers? Because that's a sharp surge that we're seeing now.
So we are following the percentage completion method. So in 23, 24, 25, the average sale price is increased. And because of that, the EBITDA margin is much higher. And we are continuing on all the other projects we have taken. We are aiming the same margin can be achieved. So
it'll be around 52% is what you're saying, even going forward?
We are thinking about that. So we can achieve the same margin.
So your square foot per square foot pricing will be around 50 to 60,000 going forward?
Right now, depending on the project, because commercial and residential, both we have got projects. So depending on the project, depending on where we are located, it's between 45,000 to 65,000. Okay. That's the price range we are working on.
Now we have 13 projects that are listed for execution, if I get that number correctly, compared to awaiting approvals. In those projects, what kind of revenue recognition are you expecting, and by when do you start recognizing revenue from those projects?
So total 16 project is, so 5 is upcoming, 5 is ongoing and 11 is upcoming, out of which 7 project that will be around estimated sale of 7 lakh square feet will be launched in the current year. And the total balance 12 lakh will be launched next year. So that is the total gross development.
Okay, so what is the idea on growth then when you're looking at higher square foot projects going forward? So the top line, what kind of growth are you expecting there? And in terms of, since you're an asset-light model, so you won't be looking at a lot of capex, the pipeline will be asset-free. So what is the plan with the cash that you have? Will you be giving it out as dividends? Will you be reinvesting it back in the business? Because it won't be requiring that kind of reinvestment as well, since you're just taking buildings and redeveloping them.
Yeah, so two separate things. One is taking care of our investors. Yes. At the appropriate time, we'll take that decision, how to share those prosperity with existing investors. And as far as our proceed is concerned or our profit is concerned, yes, we will be plowing back into the business because we want to grow this business. Since last 6-7 years, we have done many redevelopment projects in ultra-luxury category. And that model has proved very robust and very solid. And according to one report, almost 30,000 buildings or societies are about to go for redevelopment. So we have got a huge market which is ahead for us,
Okay.
Fair to say that from 560 crores in FY25, you would go up to say 900 or 1,000 in the next 3 years?
Difficult to say that, forward looking,
Yes.
But whenever, after listing, when we'll come here, we'll give you the guidance.
We'll get all the numbers from you.
We'll give you the guidance. And we are a very unique company. We do not have any RERA case also. As I said, technically we are net debt free. We don't have even a RERA case. Our ROE is very high. Our EBITDA margin is also very high. And we do very fast execution. And because of that, that brand equity we have built, that in luxury space, we make projects very fast.
Got it. Makes sense. And we understand compliance issues, so you can't give us forward-looking statements, but definitely we'll ask you all of that once the stock is listed as well. Thank you so much, gentlemen, for joining us today and telling us about your company. That's about Sri Lotus Developers and Realty. The company is largely into redevelopment, most of it, 93%. So interesting business model there. Time for a short break now. Management of Allied Blenders will join us next to discuss their Q1 numbers and more. Stay tuned for that.